before we start management accounting strategy, what do we mean by strategy? A strategy is a plan of action to achieve a particular objective. So when you have a strategy, our objective is to pass. So what is our strategy? What is our plan so that we attain that one? So the plan is this. First of all, you need to know what is it that you're supposed to cover under that particular unit. That is the plan. Number one here, we are laying down the strategy. Or strategy is a plan of action to attain a particular objective, isn't it? So now we are laying down the plan. So the first thing is to know the course outline, the outline here. So topics, number one, we have the introduction. Introduction to management accounting. That is the topic number one. Introduction to management accounting. Introduction, or can you just write introduction? That is topic number one. That is topic number one. Just a minute. It has inventory control, and then it has what we call labor costing, and then we have overheads, and then we have activity-based costing. Activity-based costing. So that is those are the three. Then number four, we have what we call cost methods. Cost methods here. Here we have job costing. Job costing. We have batch costing. Batch costing. We have process costing, service costing, process costing, and then we have joint products. Number five, we have marginal and absorption costing. Marginal and absorption costing. Here we have income statement. And then we have, we have income statement. We have CVP analysis. And then we have non-routine decisions. Number six, we have budgets. And number seven, we have standard costing. We have standard costing. We have standard costing. So those are 7 areas we need to cover. Those are 7 topics. 7 topics that we need to cover. Those are the course outline. So once you have the course outline, the next thing, the first, you show some students do not know what is it that they're supposed to cover to clear a particular unit. Non-routine decisions, non-routine. This is non-routine decision. Non-routine decisions. Non-routine decisions. Now, once you know what you're supposed to cover, the next thing is to ensure that you have information, you have the data that covers all the areas under that unit, isn't it? So I have all the information. So your work is just to come for it. If you don't ask, I'll not give you. But if you ask her, it is your responsibility to ask, isn't it? You take initiative. Some students don't take initiative at all. So you ask, you cannot pass without going through this. How will you pass now? You have to go through this, and then isn't it? Then now you have to have a study method. Some students do not know how to read. That is what I've discovered. So now once you need to allocate time to study this among other units that you're doing. Don't overread another one and then you forgo these other ones. So now you're going to adopt this one, S3RQ, this method of reading, isn't it? So S stands for, some of us know this method, isn't it? You've heard of this one? This is a code for studying, isn't it? So the S stands for survey. Survey means when you're reading a topic like this one, you determine the volume of that particular topic in terms of, you determine the workload in terms of volume, isn't it? So you survey so that you know how to allocate resources. Like now this one, because it covers, it is a very important topic, this one. By just seeing the breakdown, it is just voluminous. This one can be a topic on its own, a topic on its own, a topic on its own, a topic on its own. You see? So this is a voluminous topic. So when you survey it, and by the way, for every sitting, we have more than, it must be examined here. You must get a question of more than 20 marks under this topic so that you can allocate more time and focus on that topic because it is very important. So to survey it is to count the number of pages that contain that particular topic so that you can allocate time and to know whether that topic is important or not. And then the first R here stands for read. Now you have surveyed what you want to read, now you read. I know some of us know these things. So you read. The only thing in incorporating your reading, you concentrate. Some students have issues in concentration. So their mind is all over. So they are not reading. So you might think they are reading, but they are wasting time. So they are thinking about other things that happened yesterday, the other day, and so forth and so forth. Isn't it? So now you concentrate. You concentrate. So you read, you concentrate when you are reading, isn't it? If you don't know how to concentrate, we can as well discuss that. But you concentrate so that you absorb much. If you don't concentrate, you will not absorb much. So you need to block the other thought system when you're reading. Then the second R here stands for recite. When you have read something, you now try to recall it without the original. To recall it. For example, here can you be able to define management accounting? Can you differentiate between management accounting and financial accounting? Can you, so those things without the original, isn't it? That is what we call recite. You don't need to bring the, the exact words. You need to bring the meaning, isn't it? Management accounting can be defined in different ways, but bringing the same meaning. So once you've seen the original meaning, you can use your own words to bring the original. So that is what it means by recite. And then the third R here stands for review. To review means now you're comparing what you read initially. Before you conclude your reading session, you must review. You compare what you read and what you recited, whether they agree. Whether they agree. So that is what it means to review. Of course, when you're reading something for the first time, it becomes very difficult to maybe remember. So you read again. You read again. And then now Q here, Q stands for questions. Q stands for questions. So you identify questions, you go, we have questions. Already we have the booklets. You go and identify questions that relates to that topic. We have some revision materials that have extracted questions in accordance with their topics. So you go and find out if the information you have can assist you to answer those questions. So you go and, for example, introduction, you go and find out questions that relates to introduction and see whether you can answer, isn't it? Yeah, so that is question. So the students who will pass exams, it's not a matter of guesswork. It is an automatic thing. So they spend 65% of their study time, 65% of their study time reading, reciting, and reviewing all the information. The more you read, recite, and review, the more the information sticks or becomes part and parcel of you. The more you read, recite, and review, the more it becomes. Like me, I need only say 20 minutes, 20, and I'm ready for this paper. Even if it comes now, I'll pass. Why? Because I've been doing this again and again, isn't it? So this paper only need 20 minutes to go through everything, and then I'll be ready for exams. I'll be ready for, and I will pass. Why? Because I've been doing it again and again and again, and so now it is part of me. It will take a lot of time to remove this information in my system. So that is how it works. Some students only read a week to exams and they expect to pass. If you do that, you will fail. you will fail. So you keep on reading. And then you don't say that I read this information yesterday. The more you read it and recite and review, the more it becomes easier and the less it takes lesser time to review that information and recite it. So you don't say that I read this one, so I don't need to read it. Some students only read once. They only read once. Like now, it happens in high school. You only read a topic once. Only once. Surely, how can it be part of you? You will fail. Not that you, so you have what you need to read, and then you follow this format. So that is strategy number 2. Strategy number 1, we said you have to know everything. You have to know the outline. This is the outline. Then number 2, you have to get this data. It's already there. You don't need to wait anybody. You just read, and then when we come here, you just revision part of it, isn't it? We do have very limited time, so you can get this information in advance and start going through. And then we can identify important topics. Like I've told you, this is very important. It comes in every sitting. It comes in every sitting. Sometimes even 30 marks. Sometimes even 30 marks. Okay? Yeah. So these two also, you must get a question there. So these 2 topics already, you have 40%. Here, you must get a question here and here. In every sitting. So those are how many marks? 40. So you only need 10 to pass. So how do you fail? I don't understand how you fail. So that is, then now you become, that is strategy number 2. Strategy number 3, you become proactive. You are word of the Mishaiski word proactive. What is proactive? When you say somebody is proactive, what does it mean? A proactive person. What is the opposite of the word proactivity? You've heard of the word proactive. So proactive means you take initiative for your personal growth. You take initiative. When you are not proactive, we say you are reacting, isn't it? So if you are reacting or you are reactive, it means somebody else is responsible for your growth. Maybe your parent, not yourself, or the government, or your teacher is responsible, but not you. You have no responsibility for your growth. Somebody else, isn't it? But if you're proactive, it is you. You take initiative. You ensure that what do I mean by taking initiative? You probe questions. You find out information. You go topic by topic, find questions. You discuss with your fellow colleagues. You disturb teachers. If this teacher is not good, you sex another one, isn't it? You don't say that the main teacher is, I'm not getting him. All these teachers have gone through the system. They can assist you. If I'm not good enough, you find another teacher, isn't it? So you're being proactive, isn't it? If another student is he has understood a topic, you don't shy off. You go and ask, isn't it? So you take initiative. You take initiative. And then now here another characteristic of proactive person is that he concentrates. He identifies those things that he can change, and then he concentrates those things. There are some other things you can never change them, and there are some things you can change. For example, you can change the way you write. You can change the way you read. You can change the way you attend to class. You can change the way you organize things. Those are within your control. But there's some other things outside your control. Like, for example, you can never change my skin color, isn't it? Or you can never change the way I talk. You know, those are outside your control. So don't focus on those things that you cannot change. You focus on what you can change in terms of this. You know? And then now that is strategy number 3. And then strategy number 4, the last one, we're going to be mature enough. You know, mature? How do you define a mature person? How do you define a mature person? The one who is a mature person to you? Who can advance many years? Who is a mature person? Somebody who can think for themselves. You can think for yourself. And you, who is a mature person according to you? Somebody who has many years. Who is a mature person? In which way now? Certain way. Which way particularly? And you? Sorry? Good reasoning and making decisions. Which decisions? You can make decision to ban the school. Relevant decision. So to me, I define a mature person someone who can be able to combine courage, you are courageous enough, and considerate. So you see there are things that are in your heart. You can be able to bring them out, but considerate to the recipient of the information, isn't it? So these things that you're bringing out, they are geared towards somebody else, isn't it? So there are some people who have low consideration. So they are big burned inside, but they cannot say, isn't it? So those ones, I call them immature. So it will burn up one day and they burn everything. And then we have those ones who are very courageous, but they are not considerate. They can just tell you anything, isn't it? Without knowing that you also have some feeling. So you combine courage and consideration. If there is anything, you don't go around murmuring. You confront that person, but in a considerate way. In a considerate way. So you don't keep things in your heart. You bring them out. But so if there's something that is not going well in the school, you approach the relevant persons, isn't it? Then you bring out. Okay. Then we give feedback. Feedback is given in 3 ways. There is start, stop, and continue. So maybe there are things that you're not doing that I think, now I know your vision is to pass these things. So in regard to your vision, there are things that you might not be doing. I can require to start doing them. Isn't it? Like maybe I can notice that you're not reading. How will I notice that you're not reading? When I give you any question, a test, you fail. I ask you a simple question on a particular topic, you don't answer. Then that one is an indicator that you're not reading, isn't it? Therefore, I can require to start reading, isn't it? Or there are things that you might be doing that they're contradicting or they're conflicting your vision, isn't it? So we might require to stop doing those things. Maybe you're always on your phone, always on your phone. Some other things that are negative, that are not good, they will hinder your objective. We call them stop. So you can require to stop those things. And maybe there are things that you're doing that they are very relevant to your vision. So we can point them out to you. We say, this one you're doing well. I can see your handwriting is nice. You're organizing your work very nicely. Continue doing that. So we give feedback. So feedback is a 2-way system. You can give feedback to the teacher. The teacher can also give you feedback in those manners. Start, stop, and continue. That is the strategy we're going to adopt. Is there anything that you feel we can also incorporate so that we get our... you see, you must have a strategy, isn't it? First of all, you must begin with the end in mind, you know? You must paint the picture that you want very clearly. That thing that you want must be very clear. Then once it is clear, then you know the lifestyle you need to adopt to attain that particular thing, isn't it? So the thing that you need must be very clear in your mind. You must paint the end at the beginning. And then now you strategize, you formulate ways in which you can attain that particular thing. So now our strategy is that we must get all the information, number 1. And then once we get the information, we adopt this style for reading, number 2. Number 3, we have said we become very proactive, isn't it? Number 4, we have also said that we give feedback and we become mature enough. Any other thing that you need to add? So now that is just by the way. we now want to start off. So we have a group. If you're an online student and you're not in our group, we have some other online students that are not our students here. So so you just call me on this number, then we are going to add in our group. We are going to be sharing our notes on that group. So if you're a student, you call me on that number so that we can cooperate you in our group where we'll be sharing notes and other materials. So we have formed the group. What is the name of the group? MA? December 2023, isn't it? So we want to start with the introduction. MA December 2023. Na mbona sioni? Oh, invite, eh? Just a minute. So nimeshare notes hapo, angalia kwa hiyo group, introduction to, I've shared some notes there. You can check them in that group. So that is introduction. We're going to start on the introduction part of it. So we're going to start on introduction. So if you're an online student, kindly just notify me through that number and show your payments details. You send me a payment details. Some students are not our students and they are joining our classes. So only to ensure that we have students that are only ours. So if you are our student, please notify me through that number, including your payment details. Now, we start with the definition of management account. So introduction, you need to know the definition. Under introduction, we have definition, and then we have cost classification. So how do you define management accounting? If you can open that one, it is the process of identification, accumulation, analysis. You identify, you accumulate, and then preparation, analysis and preparation and communication of information used by management to plan, evaluate, control, and make managerial decisions. So you identify information, you accumulate the same information, and then you prepare it in a way that you prepare it and you communicate to management to facilitate planning, control, and decision-making. That is management accounting. So you identify information, you accumulate the same, that is data, then you analyze, you communicate to management so that they can use it for planning, to evaluate, control, and make managerial decisions. That is management accounting. So what are the comparisons? What are the comparisons between financial accounting and cost accounting or management accounting? Management accounting is the same as cost accounting. What are the similarities between financial accounting and management accounting? So both of them, they are concerned with the recording and the presentation of financial and cost data. So both of them are concerned with presentation and representation, recording and representation of financial and cost data. That is number one. Number two, they apply the same principles of double entry when recording information. They apply the same principles of double entry when recording into transactions. And then number three, they use the same documents, i.e. books of original entry. They use the same documents. Those are the similarities. And then we have differences between financial accounting and, so you also need to know the differences between, financial accounting, differences between financial accounting and cost accounting or management accounting. Financial accounting and management accounting. So the differences between financial accounting and management accounting. So here we have financial accounting here, and here we have management accounting. So the difference number one is that the financial accounting reports are submitted to the shareholders. The reports that are prepared for financial accounting are submitted to the shareholders. Shareholders are the owners of the business, while the reports that are generated by management accounting or the cost accounting are submitted to the management, to management. That is difference number one. And then the difference number two, preparation of financial accounting is a statutory requirement. It is a statutory requirement. It's required under the law to prepare financial accounts. And then number two, preparation of management accounting is a voluntary exercise. It is not compulsory. You can prepare it or not prepare. It is no law that requires that you must prepare management account. It's just a voluntary exercise. Okay. And then number three, financial accounting statements are periodic. They're prepared periodically, maybe half a year, or a year, on a yearly basis. So management accounting are continuous. They are continuous. They can even be, they are continuous every hour, every day. So they are continuous on a daily basis or on an hourly basis. Then number four, the statements are prepared, the financial statements are prepared as per the international accounting standards and the international financial reporting standards. So they are prepared according to international reporting standards and international financial reporting standards, these ones. The other one, cost accounting, the statements are prepared as per the Chartered Institute of Management Accounts. The reports are prepared as per the Chartered Institute of Management Account. That is difference number four. And then number five here, financial accounts are subjected to audit. The statements that are, the financial statements are subject to audit. They must be audited. It's a requirement. And the management accounting statements are not subject to audits. They are not audited. And then financial accounting is conventional or static. In other words, it's the same. It's static, it's conventional, it is the same. And then a management account is dynamic. It keeps on changing from one organization to another. The way this one reports is a little slightly different. It's not the same throughout. And then number seven, financial accounting emphasizes on recording of financial transactions. Management accounting emphasizes on cost control. So those are some of the differences. Then another thing that maybe I might want you to write there is that I don't have it here in those notes. maybe you can just write it also. You can include it there. So we have some, you can just write this one somewhere. We have some weaknesses of financial accounting that can be solved by management accounting. So we have a limitation of financial accounting that might be solved by management accounting. Limitation of management accounting, limitations of management accounting, that might be that are solved. Limitation of financial accounting, sorry. Limitation of financial accounting that are solved by management accounting. Limitation of financial accounting that are solved by, we have a limitation of management accounting that are solved by, limitation of financial accounting that are solved by management accounting. So number one here, we have no standards to assess the performance, no standards to assess performance, no standards to assess performance. No standards to assess performance. Then you write in financial accounting, there's no well-developed system of standards. There's no well-developed system of standards. There's no well-developed system of standards to evaluate the efficiency of the organization. To evaluate the efficiency of the organization. To evaluate the efficiency of the organization. In the use of materials, labor, and overheads cost. In the use of materials, labor, and overhead costs. And then number two, financial accounts only provide historical information. Financial accounts only provides historical information. Financial accounts only provide historical information. And then you write there financial accounts is mainly historical. It's mainly historical. And tells about the cost already incurred. It's only historical and tells about the cost already incurred. It tells about the cost already incurred. Okay, so that is another limitation of financial accounting. That's number three, no classification of cost. No classification of costs. No classification of costs. In financial accounting, in financial accounting, there is no such a system by which there's no such a system by which there's no such a system by which there's no such a system by which costs are classified. Costs are classified. Costs are classified so as to give data regarding costs. So as to give data regarding costs. Then number 4, it is not helpful in price fixation. Not helpful in price fixation. Not helpful in price fixation. So in financial accounting, costs are not available to determine the prices of products and services. Costs are not available in determining prices of products or services. And then the last one, no control on cost. No control on cost. Is it number 5 or 4? No control on costs. No control on costs. No control on costs. It does not provide a proper, control. It does not provide proper control of materials, wages and overheads. Material, wages and overheads. So it does not provide proper control of materials, wages and overheads. So those are the limitations of financial accounting that led to the introduction of management accounting. I have seen that question severally. It is there. And also I've seen that question where they want students to differentiate between financial accounting and management accounting or cost accounting. Management accounting and cost accounting are the same. So those are some the things that are not there. And then now, what is the objective stroke advantages of cost accounting stroke management accounting? What do we need to study these things, or what do we need it? What are the objectives? So we have the objectives of management accounting. Objectives. Yes.
Why is it very hard to set standard by financial accounting? If big one accept it international and cost accounting, Nigerian accounting,
Come again?
Why is it very hard to set standard as part of limitation of financial?
So when it comes to performance, you see, my financial accounting only records what has happened. For example, if we paid salaries of 200,000, it just records that 200,000 has been paid, isn't it? Or we have spent this much on this particular item, isn't it? But now when it comes to management accounting, we set standards in advance. That is why we have standard costing, okay? We say we anticipate that you're going to spend 20 shillings on 1 kg of material, isn't it? Then at the end of the day, we're going to compare with the actual expenditure. We have already set the standard. These are our standards. In financial accounting, we don't have those standards. We only record what has already happened, okay? When we generate revenues, we say these are our revenues, we generated them, isn't it? So it's only about recording. We have double entry system, just to record transactions that are occurring, isn't it? But now we cannot be able to compare them with the actual occurrence, isn't it? In management accounting, we will say this is the amount of money that you need to spend on wages. This is the amount of money that we set aside to spend on wages. Then at the end of the production process, we're going to compare with the actual expenditure. If the actual is more than the standard, we ask questions. Why is it that you surpassed this thing? Why is it that you exceeded their expectation? Maybe you said you're going to spend 20 shillings per hour, isn't it? And now you have spent 30. Then questions are going to be asked. Why is it that you spent 30 and according to our standard is 12? When you are setting these standards, we consider all factors. If you spend 30, is it that the labor was not in constraint? Was it that was it because of inefficiency? Was it because of negligence? So those questions must be asked. If we find out that there were no other factors except negligence, obviously you can be able to tell why is it that you exceeded or you didn't you underperformed, isn't it? But in financial accounting, that one is not there. We don't set standards. How much salary you are going to pay employees, or how much you are going to spend on a particular expenditure. We just record them. Then you are, at the end of the day, we're going to say these are the sales, these are the expenses, this is our profit. So we can't be able to compare and see whether somebody has performed well or not. It doesn't give those provisions. So now we have the objectives. Why do we need study management accounting? Number one, it's to control cost. So it controls cost. It enables the organization to maintain costs at desirable levels. How does it control cost? It sets standards on the cost to be incurred. So now when you're incurring cost, whoever is incurring cost is aware that these are the standards, isn't it? Those standards are set in consideration of all the variables, all the factors, isn't it? So now when you're incurring cost, you're very, very cautious not to surpass the standards, isn't it? So in that manner, we can be able to control cost. Then for decision making, so the information that is provided by management accounting can be used for decision making. A decision such as whether to continue making a product or not. So we can analyze whether the product is profitable or not, whether we accept a special order or not, whether we close a particular product branch or not. So those decisions. So financial accounting gives us information, management accounting, sorry, gives us information that is necessary for us to make decisions. So it provides information for decision making, and then for planning, it also facilitates planning. So the information that is provided by management accounting can use to set budgets. A budget is a forecast, is a plan of cost and revenues that we expect in a future period. So it facilitates planning, and then it can be able to help in determining or sustaining the cost. So it helps in sustaining or determining the cost. So in management accounting, it encourages the recording of the production costs. When you're producing a product, we have the cost element, which is the material cost, which is the labor cost and overheads, isn't it? So we're able to allocate overheads to each and every product that is produced. We're able to allocate the material cost to a product. We're able to allocate the overheads, material, and labor. We're able to distribute it according to the product. In that manner, we are able to determine the costs of a product. When we determine the cost, it is easier for us now to set the profit margins. And then it can also disclose waste. It can show whether there are wastages or not. Because by setting standards, we interrogate the standards whether they are being met or they are being not met. So when we set standards, we compare them at the end, whether they are being met or not. Is it because of wastage? Isn't it? If you're not meeting standard, it can be maybe you are wasting. We have given you a particular quantity of material to undertake a particular activity. We know that for you to make this particular product, you need this much in terms of material. Okay? Now we're going to see, maybe you now require more material than what we need, isn't it? So unaona sasa zile watu wanajenga nyumba na kuambia nataka simiti mifuko ngapi? He wants 10 cement, isn't it? 10 bags of, but now when you go and interrogate what was the work of these 10 bags, you find that some of them were being taken away, isn't it? They are not being used for the purposes of construction. So you need to know someone. You can have two constructors, one of them to set standards, another one to undertake the job. The one that has experience tell you that for you to come up with this particular building, you need this number of items, isn't it? So you just do your research. If somebody goes beyond that one, then we need to know why. Is it because they are wasting material? Is it because they are stealing? What is happening, isn't it? So we interrogate those things. And then measure of efficiency. What is the difference between efficiency? When we say something is efficient, what does it mean? Efficiency means it is done smoothly, isn't it? Without hitches, isn't it? Without hitches. Of course, we set standards, time, the amount of time you need to take to accomplish a particular assignment, isn't it? So if you are efficient enough, you need to do this work. If you know that work, you are competent enough to do it, then you need to accomplish it within this set time frame, isn't it? If you're taking more time, then you're not efficient. You're not efficient. So it can also help us to measure efficiency of somebody, then setting the selling prices. So once we know the cost, it is very easy for us now to determine what it is that we need in terms of profit on top of the costs, isn't it? So those are the objectives of management accounting. What are the limitations of management accounting? What are the limitations? Limitation is cost accounting or management accounting is not exact. It involves some elements of judgments. It's not exact. There's some judgment. It needs your personal opinion in some other circumstances. So in other words, it becomes biased. In some other circumstances, it requires personal opinion. Therefore, it is not a very objective. So management accounting provides information of making optimal decision or ideal decision in specific circumstances. However, there's no best decision in all circumstances. So in other words, circumstances can change. The environment under which we anticipated the decision to be accomplished might change. And then now that one will change everything, isn't it? And then there is also, it involves massive paperwork. There's a lot of paperwork to record this, to record this, to take this, a lot of paperwork. Then number two, it also is expensive. It requires trained personnel. And then also to install that system, it's also costly. It is very costly. It requires very trained personnel, and it's also very costly to install the system. Then management accounting, which is the same as cost accounting, only capture quantitative data, and it ignores quality. It only captures quantity. Qualitative data is not captured. Quality. It only captures quantitative. So those are some of the limitations of management accounting. Then we have management accounting system, a management accounting system. What is a management accounting system? So it's a combination of procedures and records designed to provide information required by the management in order to conduct the operation of the organization. So it is the system that is installed, both the procedures. When we talk about management accounting system, we're talking about the procedures and the records that are needed to provide cost accounting data. So the procedures and record needed to provide the cost accounting data. That is what we call the system. So for that system to be effective, one, it must meet the needs of the managers. For the system to be effective, it must meet the needs of the managers. It must be simple, economical, and practical to use. The system must be simple, economical, and practical to use. And then it must be supported by all parties, both the top management and other stakeholders within the business. It must lead to cooperation between managers and employees. There should be no friction between the management and the employees as a result of the system that is being installed. And then it must put in a system of wages that is satisfactory to the employees. And then it must also establish the cost accounting department. It must establish a department. So those are some of the things that are required for an effective cost management accounting systems. Then we have some difficulties when installing the system. Number one, sometimes there's lack of support from the top management. So sometimes there's some of the difficulties when installing a management accounting system is the lack of support from the top management. Number two, resistance to change by the employees, especially from the accounting department. So sometimes there's resistance from the employees. They do not require that system. And then there is also the cost element. It's very expensive to install the system. It requires sometimes huge investment in terms of resources. Then there's also a challenge sometimes to get the very experienced and skilled manpower to run the system is also a challenge in some circumstances. Then forms or records might be inappropriate, may not contain the adequate information necessary. So we might have inappropriate forms to collect information. So that is what you need to know. That is the introduction part of it. Under introduction, we also have what we call cost classification. Cost classification. So that is introduction. Introduction, you're supposed to know those things that we have discussed, the objective of management accounting, the differences between management accounting and financial accounting, factors that led to the introduction of management accounting, and those are the introduction. And then we have cost classification. Cost classification. That is, it is under that introduction, but it's subtopic there. So cost classification. Costs are classified in different ways, depending on the way they respond to the units of production or any other external factors. So the first classification is according to behavior. We can classify cost according to behavior. According to behavior. So under this classification, we have variable cost. We have variable cost. B, we have fixed cost. And C, we have semi-variable cost. Semi-variable costs. So those are the first classification according to behavior. We can classify costs according to behavior. Under that classification, we have variable cost. So variable costs are those costs that varies in accordance to the volume of production. So they are the cost that changes in accordance to the volume of production. If you produce more items, you incur more of those costs. If you produce less items, you incur less of those costs. So they change in accordance to the output. Example is labor cost or material cost. Material cost or labor cost is considered variable cost. Material cost and labor cost. That is an example of variable costs. So it changes. If you produce 2 units, you incur less cost. If you produce 100 units, you incur more cost. Then we have fixed cost. Fixed cost. So graphically, they go like this. So they go, these are units. And this is the cost. So the more units you produce, the more cost you incur. The less units you produce, the less cost you incur. Those are called variable costs. Then we have fixed cost. These are those costs that remain constant, irrespective of the number of units produced. Fixed costs are those costs that remains constant, irrespective of the number of units produced. Whether you produce 1 unit, you still incur the same cost. If you produce 1 million units, you incur the same cost. Example is rent cost, isn't it? If you've rented this place for your production, you see, if the rent amount is 100,000 per month, if you don't produce, you still pay 100,000, isn't it? If you produce 1 million units, no problem. You still pay 100,000. So they remain constant irrespective of the units produced. Then we have semi-variable cost. Semi-variable cost. So these are costs that are partially fixed and partially variable. So they are fixed up to a particular point, and then now they start increasing or decreasing depending on the output or the usage. For example, electricity. This electricity, we have a fixed amount that you must pay, whether you're using electricity or not. There's a fixed amount that you will pay. Even if you don't use electricity at all, so long as it is installed in your house, there's an amount you will have to pay at the end of the month, isn't it? It's called a fixed amount. Then thereafter, it will depend on the usage. So there's some people who use more electricity, they pay more. Others use less, they pay less. So that is the first classification according to behavior. And then number 2, according to controllability. According to controllability, we can classify cost according to controllability. We can classify cost according to controllability. Controllability means they can be maintained at desirable level by management. In other words, there's those costs that management can do something about. They can control them, either they minimize them, or if they don't minimize them because of their negligence, they can either go up or go down. There are some other costs you can do nothing about them. So that is why we classify them according to. So number one here, we have controllable cost. A, we have controllable cost. Controllable cost. Controllable costs. And then we have uncontrollable cost. Uncontrollable costs. Then we have C, we have period cost, period cost. And then D, we have product cost. So controllable costs, these are those costs which are which may directly be regulated or given level of management authority. So there are those costs that management can do something about to regulate. So they can be regulated by management. They can be regulated by management. Example is material costs or labor costs. There's something that management can do to regulate the material costs. They can buy it from a cheaper source. They can ensure that they are properly utilized so that to break them down. There's something that they can be done to maintain, to control them. We call them controllable costs. The mostly variable costs are controllable costs. They can be controlled. And then we have uncontrollable costs. These are the costs that the management can do nothing about to control. So these are costs which cannot be controlled or influenced by managers' concern. So they cannot be controlled, or management can do nothing to bring them down or up. Mostly fixed costs are uncontrollable. So once you have been told that you're going to be paying rent of this much, there's nothing you are going to do it. It's going to remain that way, isn't it? Is there anything that you can do to minimize rental costs? There's nothing. Once you have agreed with the property manager or the property owner, you pay in accordance with the agreement. Unless you defer, but you're still going to pay, isn't it? So those are what we call uncontrollable costs. And then we have period costs. So these are costs that are controlled according to the length, depending on the length or duration of consumption or usage. So now to control the cost, you reduce the period of consumption. You reduce the period of consumption. Then we have product cost. So product costs, these are costs that are incurred in producing a particular item or product. These are costs incurred in production. So they are controlled in accordance to the number of units produced. So those are what we call product cost. So that is the second way we can be able to classify cost. And then the fourth way we can be able to classify cost is what we call according to time. Number 3, according to time. According to time. So cost can only be classified according to time. Time here we have historical cost. Historical costs, A. And B, we have predetermined cost. Predetermined cost. Historical cost. What are historical costs? These are costs that are determined after they have been incurred. They're determined after they have been incurred. So you come and just record, maybe this is what we incurred on salaries, this is what we incurred on utilities, water. So they are costs that are determined after they have been incurred. Predetermined costs, these are future costs that are future costs that are determined in advance of the specification of. They are future costs which are sustained in advance. They are costs that are sustained in advance. Historical, they have already been incurred. Predetermined, they are determined in advance. And then number 4, according to identification with the cost unit. We can classify cost according to identification with the cost unit. With the cost unit. Here is where we have A, we have direct cost, and B, we have indirect cost. You have heard of direct cost and indirect cost. So we have direct cost. A direct cost is a cost that you can identify in the final product. It's a cost that you can be able to identify in the final product. So when you're making the product, cost elements is material. The cost element when you're making a product is called material. We have A, we have number one, we have material cost. When you're making a product, we have material cost, we have the labor cost, and we have the overheads. Those are the three elements of cost in production. So the two, you can be able to identify them in the final product. For example, this chair here, we can be able to tell how much was the cost of the timber, isn't it? Sinikweli. To estimate the timber here, it is maybe 1,000, isn't it? And then whoever was engaged to make this chair, we can also be able to estimate how much was given, maybe 1,000 also, isn't it? So those two costs, we can be able to trace them here. But there's some other costs that were also involved, like electricity. Where this chair was also made, there was the cleaning services. Those ones are what we call indirect cost. So those are the costs that you cannot identify in the final product. We call them overheads. They are the costs that you cannot identify in the final product. Just a minute, in the final product. So you're saying those are cost classification. We can classify cost. Then our assignment, we can also classify cost according to function. So you go and you do some research on how cost can be classified according to function. A function means a department. So you go and do some research, some reading on how cost can be classified according to functions. And then you identify a question that relates to what you have already read in the past papers. We're going to share the past papers. And then you need to identify. Then the last thing there, we have those terminologies that we use in management accounting or in management accounting or cost accounting. We have types of costs, and then we have, so they're most likely to set questions on costs. They will just ask you to define a particular cost. For example, they will ask you to define what is a relevant cost or a sunk cost or opportunity cost. Or a notional cost. So those costs are there. I've outlined them there. You can read them. So other costs like avoidable costs. So those questions, they are very fond of asking those kind of questions, where they want you to imputed cost, revenue cost, actual cost, out of pocket cost. Sawa sawa. Then now you can also terms used. So that is the first part of it. So tomorrow we'll be doing cost estimation. Sawa sawa. Any question? So that is the end of our class today. So tomorrow we shall be doing cost estimation. Eh? Marginal cost is that is a topic on its own. You will understand it more when marginal costs are what we call variable cost of production. Marginal cost is a variable cost in management accounting. It's a variable cost. Marginal means variable. Marginal means variable. Sasa, those are the marginal costs. Tunaelewana? So sasa your responsibility, you go identify questions that is relate kwa hii topic. Unajua ni makosa sana walete wakwambie, this question nimeiona sana, differentiate between financial accounting and management accounting. The 10 marks. Sasa unafika hapo unaanza kujiuma vidole. Si mzuri, si ndio? So you read and go now get all questions. Your topic number 1. Sasa, yeah, you see whether you can answer. If you don't have, if you have difficulties answering, you forward them, we discuss, isn't it? We brainstorm. So that is the end of our class today.